Another time to do business. Good morning, everyone. Welcome to Business Morning. Thank you, Father. I wanted to say business news. Welcome to Business Morning this morning. And of course, it's happening here in Channels Television. I'm Ini John McCarr. We'll start from the global space as usual, where oil prices notched higher on Thursday on concerns about tighter global supply after the United States tariff threat on Venezuelan oil buyers, while market players also are grappling with the impact of President Donald Trump's latest announcement on auto sector tariffs. That's about 25%. Well, Brent, we see this morning gained 14 cents, that's 0.2% to $73.93 a barrel. WTI on the other side is 0.2% up, also $69.79 a barrel. On Wednesday, prices rose around 1% on government data showing U.S. crude oil and fuel inventories fell last week, and also on that threat from President Donald Trump. Traders and investors are still assessing the impact of oil demand from U.S. President's latest announcement of 25% tariff on imported cars and light trucks from next week. The view was that it could drive up auto prices, potentially impacting demand for oil, but also slowing down the switch to greener cars. The news around Trump's tariffs on autos may actually turn out to be a net positive for crude oil, because the rise in new car prices from tariffs will mean it slows down the switch to newer, more fuel-efficient models. So there is a lot of things to juggle there in the auto sector from the United States to other parts of the world. And then back here in Nigeria, the Nigeria Customs Service has started implementing a zero tax policy on imported pharmaceutical inputs for the next 2 years. This follows President Bola Tinubu's approval of tax exemptions on key raw materials used in drug manufacturing. The policy covers essential ingredients like active pharmaceutical ingredients, diagnostic kits, insecticide nets, and packaging materials. And Customs says that this will boost local drug production, reduce costs, and attract investment. Well, to ensure transparency, Customs will release quarterly reports on all imports under this policy. Is asking importers, manufacturers, and government agencies to collaborate for effective implementation. First Bank of Nigeria has filed an appeal against a ruling by the Federal High Court in Port Harcourt, Rivers State, which dismissed the bank's suit against energy company General Hydrocarbons. In a statement, the bank expressed its disagreement with the court's decision, which classified the issue at hand as a debt recovery case rather than a maritime claim. The bank also voiced its dissatisfaction with the court's conclusion that the arrest order for cargo on the FPSO Tamara Tokoni had expired 14 days after issuance. That's despite being granted ex parte. The bank, which maintains that the cargoes of crude oil on the FPSO should remain arrested, emphasizes that while it respects the judiciary, it believes that the ruling represents a miscarriage of justice. As a result, the bank has formally appealed the court's decision. The Debt Management Office has announced its Series 7 sovereign sukuk issuance to raise about 300 billion naira. According to the Director General of DMO, Ms. Patience Oniha, who met with stakeholders in the financial sector in Lagos, she says that the proceeds will be used to finance capital projects nationwide, which will yield significant benefits. Since the first issuance in September 2017, the federal government has raised 1.092 trillion naira in sovereign sukuk.
With this amount, over 4,100 kilometers of roads and 9 bridges across the 6 geopolitical zones and the Federal Capital Territory have either been constructed or rehabilitated. In addition to these benefits, which is a benefit for all of us citizens, the other reasons why we have continued to issue the sukuk, it doesn't mean that it became easy to issue it. We just got better at, after each session, after each sukuk, we meet and decide what worked, what didn't work, what should we improve on next time. So it's not as if it's easy like FGN bonds where we just put the notice and we relax and wait for the dates. But we have continued, and the other reasons are that the sukuk is project tied, so we can point at what we did with it. It promotes financial inclusion. Financial inclusion here is not necessarily about faith. It's also about the retail investor.
Welcome back to Business Morning right here on Channels Television. Let's discuss some issues around the commodity space now. Of course, beginning with the currency that we use. We saw appreciation yesterday on the Naira, 0.45%. But of course, we're still hanging on the 1,600. A lot of people have called this stability, but I wonder. Let's speak with Senior Associate Senior Manager, Financial Derivatives Company, Dumebi. Hi, Dumebi. Good morning. Good to have you. It's been a while.
Yeah, it's been a while, but I'm happy to be here.
Me too. So, are you happy with the Naira? We've seen it doing under 1,006.
Yeah.
Well, they say that's our new normal. We should just take it.
Yeah.
Or is there any hope of having a bigger value of the Naira?
So I think for now, we can just retain our expectations around where the Naira is currently trading, and rightfully so, simply because we do know that on the side of the CBN, we know that they're going to do all they can to ensure that the Naira is stable at around that level. We've seen a lot of market activity from the central bank. We're also seeing like heavy market participation from FPIs as well in the NFEM window. So we do expect that some of the transparency that we're seeing will continually support the Naira. There are risks that have impacted the Naira over the last couple of days and last couple of weeks. One of it has been speculation because of how reserves have been bleeding, and the fast rate of depletion is causing some concern in the market, but we do think
Where is it bleeding to? So at first we used to really know when the CBN intervenes, so we could connect it and say, oh, the reserve is dropping because of this intervention. But these days it doesn't seem like we really know that. We just see the reserve is dropping, and of course that's why more people will be worried about it.
So I would say, to an extent, we do know when the CBN is participating in the forex market. We have information on that. The other aspect of it is we do know that to an extent we've seen some level of debt servicing obligations come up, and to an extent that might have been a reason for that. But more importantly, we haven't seen a substantial increase in oil receipts, and one of the reasons for that is we've seen oil prices trend low, and we've also seen a lot of challenges with our oil production.
Yeah, because we also saw a drop. Our last number there was a drop.
Exactly. So to an extent, when we see increased activities from the central bank and we're not seeing significant inflows into our reserves, we match it to say, okay, most likely these are the
but should it be most
issues.
likely? Shouldn't we be able to like directly connect and say, oh, okay, there's some debt responsibilities being taken care of, that's why we see this, I think that will give people more confidence to say, well, we understand what's going on, it's being taken. Like I remember when the CBN came up and they were determined to deal with our backlog, and so everybody knew it's because they are dealing with this, and some people even applauded it at the end of the day.
I mean, I think that just speaks to transparency from official authorities, and it's something that we do think that most government authorities, especially on the fiscal side, will need to do a lot more so that people are more sensitized on the activities that are going on in the economy. From the Ministry of the Economy to the Ministry of Finance to the Debt Management Office, we are already seeing a lot of those communications happen. What we just need is for them to happen a lot more, and those conversations happening in more nuanced, positions where not only stakeholders are involved in those conversations, but the general public is also aware. So I think that's just one of the things that might need to happen a lot more so that people are aware of what exactly is going on. Because to be very honest, investors are aware of what is going on in the Nigerian economy. Stakeholders are aware of what is going on in the Nigerian economy. Key economic agents are aware. So they make their business decisions and based off of all of that.
So is it that Nigerians are not looking for information at the right place? Or
let's be very honest, someone who is looking for food does not really care about what the reserves are saying, right? So
but the reserve will eventually affect the supply and pricing of your food.
I believe that's why we are here. To have these conversations and ensure that people are aware of these things that are going on, because the information has to trickle down, and you're very right about that. And it just means a lot more needs to be done so that at least the common man can understand what exactly is going on in the economy. When you also think about it, it's somewhat how a lot of people don't see how politics also intertwines with the economy and how that eventually trickles down to what they're able to buy in the domestic markets, right? So the more people learn and more people understand these issues and these economic trends and the connections to how it affects them, I think the more understanding and the more informed they will be. So the job is obviously on people like myself and you, and obviously the people at the helm of affairs, to ensure that the general public are aware of what exactly is going on at the top, so they understand the connection and how it affects them.
So talking about being aware, obviously there's the talk about crude for Naira. That's a big one now. Yeah. We hear the initial agreement with Dangote expires on the last day of this month. Yeah. Oh, on Monday we learned there was going to be a conversation. Yeah. The committee chairman had sent a release like 2 weeks ago to say, oh, the talks are on. It's not yet over. But I mean, it's how many days to the end of March? Yeah. And we still don't have any certainty. And you know, the threat of price at the pump might increase again. Dangote is importing so much crude now. He's also exporting even finished goods. What that would do to the supply and the seemingly peace we seem to have had for a couple of months now. That's another thing that is being threatening economic activities and Nigerians. Yeah,
I mean, you're not wrong about that. And to an extent, I would say the noise around it all is what the markets are perceiving and reacting on. And it's very much expected. But I would say it's not yet over, simply because these conversations are ongoing. And we all know that the stakeholders are aware of the broader implications of these conversations to the general public, right? So I would say that in terms of the entire noise around it all and the conversations ongoing, I would say we will just have to wait and see where those conversations eventually land. But looking at the implications of what this noise right now is causing, we do see that it's beginning to somewhat impact economic activities, because there's some level of, you know, panic going on in the market. We're already seeing petrol prices at some pumps marginally increase, and people are beginning to, you know, feel the impact of that. So those are one of the things I would say that the noise is currently causing. But broadly, we also need to look at it from the market and the transactional aspect when you're dissecting the entire Naira-For-Crude deal. In itself, it was it was a development that was supposed to, number one, ensure that Dangote and other refineries that have come up that are now resuscitated, right, within the Nigerian economy, ensuring that they have access to crude oil at equitable prices, right? So what this meant was they had access to crude oil from the NNPC. They're able to refine at stable costs to ensure that Nigerians have access to refined petroleum products steadily, right? But with the fact that the deal is somewhat stalling, what that means is that petrol supply, obviously there are concerns around that. But I do think that right now, all stakeholders, including Dangote and the NNPC and other refineries, will do what they can to ensure that petrol supply is stabilized. On the pricing aspect, yes, on the pricing aspect, that's where I was going to go into the more transactional aspect of it. It's important for us to know that right now, because we're operating in a deregulated petrol price market, the trends of global oil prices are what we would use to gauge the trend of domestic prices. So whether or not the crude was purchased in Naira or purchased in the US dollar, if global oil prices are higher, that is a better gauge for us now to really check what domestic prices will trend at. Of course, we are hoping for a world where supply is stable, petrol prices are stable, and petrol prices even go down. But the reality of the transactional aspect of this deal is that we are operating in a different market structure. And what that means is that the trend of global oil prices will significantly determine the trend of domestic oil prices.
Yeah, but maybe that's sometimes difficult to connect in Nigeria. For instance, in the US, it's kind of direct. You know, you know what the global oil price, crude price is, and you see it reflects at the pump. But in Nigeria, perhaps we're not used to it, but my fear is we don't wake up one day and hear, oh, there's still subsidies somewhere. Because we see movement in the global oil space, and we haven't seen it reflect back home, either up or down. We did see Brent go down to less than 70. Now it's back to about 73 and all of that. I know there are contracts for about 2 months and all of that, but it doesn't seem like we are really there in a deregulated market yet. We're still dealing with our issues as Nigeria, and that is kind of scary. So we don't wake up and go back to where we're supposed to be coming from, which is the era of subsidy.
So I completely understand the sentiments, but I think that when changing market structure, right, happens the way ours happened somewhat overnight, right, there will still be teething pains, and I think that that's where we are now, right? We don't expect that all of the deregulation activities, everything is going to be as direct as possible. But more importantly, speaking to the connection of global oil prices and what is happening in the domestic commodities market, right, we do know that by the time you purchase crude oil, right, say from the global market, of which Dangote has been doing, even with the existence of the Naira-For-Crude deal for however long it lasted up until the contract going to be, renewed or not renewed by the end of March. We do know that Dangote has been buying from countries like Angola, buying from the US even as well. So what that means is that you're buying at the US dollar prices, you're going to bring it into Nigeria, taking into consideration the custom duties, taking into consideration the import duties. And remember, crude oil, unlike other commodities, you have to transport it, and most of the time it's just being transported by sea. So you have to also take into consideration the freight cost, take into consideration the landing cost. So there are many other costs that make up the eventual price of the crude oil in Nigeria, not just the global oil price. But in terms of direction of prices, the global crude oil prices are a good benchmark to determine the trend and direction of domestic crude oil prices. But the eventual price of what we will buy it as, global commodity price, global oil prices cannot, do not do that, because there are logistics involved, there's conversion involved, there's landing cost involved, there's offloading from the ships now to the tankers. There's a lot involved, costs that have to be catered for, right? And those are things that determine the eventual price we buy at. But in terms of the deregulation and how the markets have been perceiving and how we've received it, I will say to an extent, and from the beginning of the year, we have seen that some more players. There was a time, at least twice since the beginning of the year, petrol prices have been reduced, right? And those were, in fact, coinciding with times where the global crude oil prices also fell. So now that global crude oil prices are rising, the expectation is that domestic petrol prices are also going to rise. Where I think there is a gap, again, like we had initially spoken about, is the communication to the general public. People do not really know why they go to the pump price today. It is 670, and tomorrow they go back, it's 675. So where we need to do a lot more work is to ensure that people understand the dynamics of the market that they are now functioning in. I've mentioned that, yes, we still have teething pains, and those teething pains are going to remain for a while. They're going to remain for a while, but more importantly, it's important that we understand that desensitization of the general public is extremely important, so they understand the markets that they are now functioning in.
It sounds like you still have a whole lot of work to do.
Yes, we still do, because we're coming from a world where there was a lot of backlog, there was a lot of conversations that were not had. People didn't understand what was going on, and we're now in a world where we're forced to have those conversations. So it will take some time.
So we have to do it fast,
very quickly.
But all of this, I mean, at the end of the day, for the average man out there, is how does this affect the price of my day-to-day consumption? Looking at commodities prices, when I know I had a conversation on a decline of commodities prices, and somebody told me, no, that's not true. There's nothing like commodity prices are falling. It's still high up there. What has FDC found?
I mean, we're still seeing mixed trends in commodity prices, but overall, it's obvious that prices are still very high, right? People are still feeling the pain of high bag of rice being expensive, a Congo of rice being expensive, tomato prices being high, and you cannot take that experience away from them. It's the reality of people's experiences. And like I always say, it's extremely important for us to go back to figure out what exactly these issues are. And I think we're already aware. We just need things to start changing in that regard. We know that agricultural productivity is one of the biggest issues that are currently affecting commodity prices in Nigeria today. So what are we doing in that regard to ensure that at a national level, food prices are stable? We're able to produce food around the year and ensure that they are equitably distributed across the nation. And
because post-harvest loss is a reality.
It's a reality.
About 50%.
Exactly, for most commodities that we consume on a daily basis, right? So addressing those issues, until we begin to address them, I don't think that the reality of domestic commodity price significantly declining to what people were enjoying pre-pandemic, pre-Russia-Ukraine war will pre-reforms will be a reality right now. So in the short term, at least, for the near 2-3 months, people will still experience this squeeze in disposable income, especially because income levels are not rising as fast.
Yeah, it can't rise. Where would it be coming from? Well, I guess the Minister of Agriculture, I mean, we've tried to befriend him so much on this program, but it doesn't. Now I see him in many events, and all of that. Minister, we're still waiting for you on Business Morning. Minister of Agriculture, we see you now at events, but we would like to talk to you about some of the strategies, that you're putting in place, so that even if we're buying food or commodities at an expensive rate now, can we have the promise that by the end of the year, because of this plan, we're going to have soft landing, especially during Christmas, the end of the year. Minister, Business Morning would like to talk to you. For the 100th time, we're invited. But thank you so much, Dumebi Oluwole, Senior Associate with Financial Derivatives Company. Thank you for your time.
Thank you for having me.
All right. And Lagos State is very serious about being a financial center. And they're partnering the media, partnering the UK, and other parts of the world in doing this. And they're doing this with Enterprise NGR.
Captains of Nigeria's financial industry are gathered here for the Enterprise NGR Quarterly Members Night. A night for networking and sharing the vision and progress so far and strengthening the brand Nigerian. As guests settle down, the night begins with a speech from the CEO of Enterprise NGR, Obi Obekwe.
Collective voice of the financial and professional services sector, working to shape policy, drive reform, and position Nigeria as a global hub for investment, innovation, and inclusive growth. How do we do this? Mainly by fostering collaboration between the public and private sectors.
One of the major focal points of the night was the Lagos International Financial Center project, described by members as a game changer for Nigeria's economic transformation.
If you went to Dubai, you will hear about the DIFC. If you go to Casablanca, you will hear about the CIFC. And so, of course, we in Nigeria, with this host Lagos State, for our International Financial Center, have chosen the acronym LIFC. What could then happen when Lagos, Dirty December, becomes a place where all professionals around the world converge on? I'm talking about in their millions, and that can happen. And I mean in their millions. And imagine bankers, accountants, fintech specialists, white, black, young, old, male, female, converging on Lagos because this is where it's happening. And this is the kind of dream and vision that is driving the LIFC concept. It is a hub that promotes the development of both economic and financial system in Nigeria. And we also know that if we are able to establish this, and we're going to do it, what it does is to, in a geometric way, leapfrog the development of Lagos State. For Lagos to be able to compete with global cities. And what do you see? You begin to see, we talk about Jackpot. What do you see? You begin to see Jackpot.
The Lagos International Financial Centre is also endorsed by its counterpart in the UK, the City UK, an industry-led body representing UK-based financial and related professional services.
There's a strong support from the federal government for this initiative. And, we often say the private sector looks long-term. They look into the future. And what I'm seeing from the new government is that it's the government that has experience in the private sector. So it's a government that also is looking long-term. And at the moment, we are walking the pathway and paving the pathway that future generations will walk on. And they will remember this pathway, this moment, since November 2023, if I'm correct, when the first decree at the state level was signed for the formation of LIFC.
Apart from the Lagos International Financial Centre project, the enterprise NGR is also championing youth development with their flagship program, the Youth of Enterprise Internship, while also building more partnerships to make Nigeria the financial hub of Africa.
Well, work is on. Wonder what the future of Lagos would look like. I hope we can all get a slice of it. But we're still in the month of March, and you know that we've been doing this every 2-3 times in a week, at least until the month of March ends. We're celebrating women. This time, we're coming from the perspective of some findings by Bill and Melinda Gates, and of course they're working with WIMBIZ right here in Nigeria. So there you have it, some facts on Nigerian women, that 34% of Nigerian women want to own or expand their business, but funding is a barrier. 62% of women say funding or lack of startup capital is the primary obstacle to achieving their business goals. I wonder if the men would say that also. In agriculture, women produce 70% of the food, but receive less than 10% of SME loans. Nigerian women are more likely than women anywhere else in the world to start a small business. And we see that it's very obvious if you look around you in Nigeria. Nigerian women have a loan repayment rate of about 95%. Well, trustworthiness, I guess that's it. So why does it seem still difficult for women to access funds if they have this 95% of repayment? They're running most of the small businesses in agriculture. They produce majority of the food that we eat. What have the women done, or what have they not done, I guess, should be another question. Well, let's discuss that with the Executive Director of WIMBIZ, that's Women in Business. Ms. Omoumi Akingbongbe joins us here in the studio. Good morning and welcome to the program.
Good morning, Amy. Thank you for having me.
Yeah, so since, you're a group, talking about WIMBIZ now, a group of women in business, so you interact and have lots of conversations about women and with women, even the men, so we saw those numbers. If we could have that slide again. Okay, we have it here. So 34% of women face funding barrier, 62 say, and yet in agriculture, women produce 70% of the food, but receive 10% of SME loans, and yet they have repayment rate of 95. Is it that the women have missed something out?
Well, I think it's a two-way traffic on the side of the women, as well as institutions responsible for dispensing of these loans. And to also buttress the facts of these statistics, I worked in the banking industry for about 18 years, and I led some women banking initiatives prior to then. And these statistics are real. I had been a part of researches that showed that even in the banking institution, the volume of loans given to women, when you look at the data, is low, very low compared to what it is for the global view. Now, in terms of these financial institutions, if there are certain gender-friendly policies that would drive energy and attention towards this gap that exists, creating awareness and creating dedicated funds for women, it would help improve things.
What would be different? Because, men do not need those extra attention. a loan requirement is a loan requirement, right? Are there things that stop women from meeting up those requirements, or is it a matter of sentiment with the financial institutions?
I mean, this issue of sentiments, I've had a lot of people come to me about such conversations. Now, there's some social barriers that automatically would limit women. If you look at the requirements for some of these facilities, first you have to present some sort of collateral. Collateral sometimes could even mean landed properties. Go back again and check the percentage of women that actually have landed properties in Nigeria, less than 10%. So there's that limitation already. And we've had this go on so long, this disparity go on so long, that it begins to look like the norm. So you only tend to show up sometimes even for things that you're exposed to. So if I feel I don't stand a chance of even accessing these loans, I would not even bother applying. There's so many things demanding for the time of a woman. So even if you look at the volume of women that apply for these loans is low. Then, knowing that they cannot meet up with these requirements, they tend to just look at alternative channels of getting these funds.
Which limits them to the small businesses and,
exactly.
And just, you know, like the
always in survival mode.
Exactly.
Not in a scalable
So that would
platform.
mean that having these special loans for women should consider what collateral would mean, you know, and on things like that.
Yes, so the requirements should focus on the societal barriers that these women face and other limitations that they have, and creatively and innovatively come up with even, I mean, you definitely want your loan to be secured. It's even a requirement, the shareholders' funds, but come up with creative ways that would speak to the reality of a woman and streamline those requirements to suit them. And of course, when you have those gender-friendly policies in place, creating awareness that a certain percentage of these funds that we have to give out as loans is dedicated to women, then I know I stand a chance.
So what would that look like? Thank God you've been in the banking, you know, you spent almost 2 decades there, according to you. So what would it look like? What would the creative, innovative package look like for women, looking at the realities of Nigeria?
Well, I made a reference to the issue of providing collaterals and all stuff. So there are instances where, I mean, you probably have a value chain already for your business. Are there other metrics we could put in place instead of saying, oh, I'll disburse funds to you directly? Can I come in at the end knowing that that way I still have some sort of security in place? Are there other alternative sources that I could check in terms of these requirements? Can I reduce the interest rate? So that knowing that, I mean, there are so many barriers that if we even want to go into the issue of the unpaid care work that the woman would normally still deal with and all of that. So factoring all of that, and it's not a one-size-fits-all. It has to be a forum where people are coming together, listening to these women, to know what are these barriers and come up with creative means to address such.
And good enough, we have a growing number of women heading banks now. So, I mean, we would expect that these creative and innovative ways that are personalized, since they are women, I know, of course, as you noted, they still have the shareholders' funds to protect. But if you have 95% of repayment rates for women, that, I mean, that alone should make you have enough confidence, you know, to create some of these products.
And interesting that you mentioned the female CEOs in the banks, and I'd like to just go back down history line on how we even got there. Now, the CBN put in place the sustainable banking principles, which insisted that banks should have a certain percentage of female CEOs and even in their board positions. Go back 10 years before that policy was in place. That was not the situation. We hardly had this volume of female CEOs in the banking industry. And that buttresses the fact that when we create friendly, gender-friendly policies, it helps with driving the numbers. The competent women that are the CEOs today, they've always been there. But because of that policy, there was an attention a spotlight to then look within and focus on the capable women in the industry.
And we hope to see more women at the top there, but not just there, but I guess once they are there, they should be able to push for more policies that can bring more women up the ladder. Maybe not even the CEO, but the boardroom should have more color than we presently have.
I mean, without undermining the efforts at all, I mean, conversations, efforts are being made. We see more banks coming up with dedicated initiatives and even funds for women. But we want more. There is need to accelerate action, and the female CEOs cannot do it alone. We need all stakeholders to be on board and support such initiatives.
We hope it doesn't end, the conversation will not end in March.
Oh.
The accelerated action will not end in March. But we know that WIMBIZ is also very busy. You try to push for the voice of women out there. About 2 weeks or so ago, we had Mrs. Awoshika, and I asked her that, I mean, we have this program every weekday. We have another one at 1 p.m. every weekday. You can count on one hand how many times we've hosted women. And it's not because we don't want women, but it seems women, there's a lot of demand. I'm a woman, I can say firsthand, but are we doing enough as women to really let our voices be heard?
You know, the journey to gender parity, according to the World Economic Forum, they say it will still take another 130 years, despite all that is still ongoing. And that's why there's that need to accelerate action. Women have to step out more. Women have to, I mean, their leadership roles, like I said, sometimes people just don't even bother because they feel they don't stand a chance. But we have to keep pushing, accelerate action, bring all stakeholders on board, and let everybody come together under one voice. So the journey definitely continues apart from the month of March. It's an ongoing drive. And at WIMBIZ, we're passionate about advocacy, talking about all of these things, because the problem known is half solved, as well as mentorship. So women, if you're already up there, despite all the demands, handhold another woman to support them. Let them not have to go through the same long road that you did. Help them cut the road shorter. So the conversation definitely will continue. And I do celebrate what you do too, of giving this kind of forum for women to be heard.
Thank you so much. But you can hardly conclude a conversation with or about women without talking about family, because it does seem like, well, that's just the way women were created, to have family first, while the man's first desire or priority is going out there to make. And I know the world seems to say, oh, we have overcome the conversation around family, career, balance, and all of that. I wonder if that's what you see from where you stand.
That is still a big barrier. Now, having a family there's a lot that still looks to the woman to have things run. We had a forum yesterday focused on women in law, and we were talking about, I mean, as a lawyer, there are needs sometimes for you to have to travel around for some cases and things like that. It's easy for a man to just say, hey, babe, I'm leaving. Cheers, do take care.
I'll call you.
But when you're the woman in that position, it's not easy. You can't just jump and say you're going. So it's a barrier, it's a limitation. And what we could do in that regard is to channel more energy, let organizations provide some sort of flexibility to make it easier for women to manage the home front. And at the same time, the other party, I mean, it takes two to tango, should also be hands-on in terms of taking responsibilities of the home front. It's not just, I mean, sometimes we have this notion of, I provide the money and all that, but the syllabus has changed. Most women are working now, earning, and it's just the way it should be. You have two legs, work on both. When you're hopping on one, you spend more time, more energy and resources, and it takes you longer to get to your final destination.
The family supports, and that conversation, I think, should still be in the front burner, so that at least spouses can be more conscious of the fact that, oh, she also has her own talents and gifts that need to be explored, and that's how I think you can get a complete human beings. It starts with a more satisfied wife and mother. Fulfillment. All right, thank you so much for joining us here this morning. Mr. Omowumi Akingbongbe, Executive Director at Women in Business, WINBIZ.
Thank you. Thank you for having me.
Good. All right, so let's take a break now. When we come back, Ladi Williams will join us. He's gathered some stories from the global space. So during the oil, we're talking about 25% tariff on automobiles to be imported into the United States. I'm sure we'll hear more about that with Ladi. Join us again. Welcome back to Watching Business Morning here on Channels Television. Let's head to the global space with Ladi Williams. Ladi?
Yeah, it's another day. And,
another tariff day.
Another tariff day.
25% this time. Mm-hmm.
Yeah, about 25.
Oh, you can handle it now.
45% and all of that. But let's look at gold first. Remember that monster rally gold started, and now we're hearing from Goldman Sachs. They're saying they've upped their end of 2025 gold price outlook. They've upped it to about $3,100 to about $3,300 per ounce, and its forecast range between $3,250 to $3,520. Remember, gold is still sitting around $3,000 right now, so the expected rises in exchange-traded fund inflows and sustained robust demand, from the central banks. We see that that's propping up what they're expecting for gold. And now we're seeing President Trump has announced 25% tariffs on foreign-made vehicles. U.S. President Donald Trump said he will impose a 25% tariff on all foreign-made cars and light trucks. And definitely that's going to impact how these, the prices of those cars when they come into the country as he gears up to widening his tariff agenda on key industries and trading partners. Shares of major U.S.-listed automakers, they slumped after Trump's comments, while Wall Street saw that it also retreated. Also, we see President Trump is saying he's open to reducing some tariffs against China, and that's in exchange for a deal to sell short video app TikTok to an American buyer. His comments come just a week before an April 5th deadline for TikTok, as a parent ByteDance, as a parent company, to find a non-Chinese buyer for its app or face a U.S. ban on national security grounds. The ban was set to take effect in January, but was postponed by Trump through executive order. The U.S. president has signaled that he's willing to further extend ByteDance's deadline. So definitely a countdown for that one. Then we see the brokerage firm renowned for commission-free trading. They're set to introduce a suite banking service aimed at retail investors with modest portfolios. A new offering that's for Robinhood is branded Robinhood Banking. It will provide checking and savings accounts features with a 4% annual percentage yield. Federal Deposit Insurance Corporation coverage there is up to about $2.5 million through a coastal community bank, and that's according to the company. We know most traders like to use that Robinhood app for crypto trading and for leverage trading in the U.S. All right, let's take it on to London now. Let's get a check of what's playing now. We did have inflation data that was out yesterday, and other matters, especially with Rachel Reeves there. Juliana joins us now. Great to have you, Juliana. Good morning.
Good morning, Laddie.
Yeah, so we have that data yesterday. Inflation rose about 2.8% year on year, but that's below the estimate of about 2.9%. I guess that's good news.
Yeah, that's absolutely right. We did have CPI data released yesterday morning by the Office for National Statistics, showing that the headline rate had eased from 3% in January to 2.8% last month, which is slightly better than expected. And I think the fall has been attributed to the price of clothing and shoes, which fell for the first time in about 3 years, which is quite a surprise at this time of the year, because we know after the Christmas rush, we then have kind of Boxing Day, early January sales, typically expected much earlier in the year, not February. So I think this data gives an indication that retailers are still struggling and are slashing prices to ensure that they have more sales. I think a lot of economists are now digging much deeper into this inflation data. And once again, the Bank of England Governor Andrew Bailey is under pressure. The Bank of England, the central bank, their main task is to ensure that inflation is kept down and is as close to that 2% benchmark as possible, but we're not there yet. And even though we did have this fall yesterday, in the next couple of weeks, British consumers are going to be hit with a wave of significant price increases. And we've got water bills rising by about 26% on or after the first week in April. Energy bills, still a major issue with the war in Ukraine. They're set to be about 6.4% higher. And then, of course, the big one, which is the rise in national insurance for employers. Much further down the line, there are still threats of Trump tariffs. So even though, yes, I suppose a fall in inflation does mean cost of living pressures are easing for everyday consumers, there is still so much economic uncertainty on the horizon that we're not, cheering from the doorsteps just yet.
Right, I guess consumers are just waiting for a time where they can actually feel the data, when they go to the supermarkets and where they're trying to buy stuff at this time. But there's still more data out for February. This time, Britain's vehicle output, that's including electric and hybrid cars, that dropped. How's the market, digesting this data?
Well, I think this is pretty much following on from what we've seen over the past 12 months, really, which is a decline in Britain's vehicle output. And this is according to the Society of Motor Manufacturers and Traders. They were having a look at February data, and it does show that persistent challenges faced by the car sector means that we're not putting out or producing and manufacturing as many cars as we did this time last year, not helped as well by that late night announcement we heard from the Oval Office from President Trump saying that he is going to be putting this 25% export tariff on cars coming into America. So yeah, not great, but no surprises here because Britain's car output has actually been declining every month for the past 12 months.
Right, and we also hear Chancellor Rachel Reeves is saying the UK government does not want to escalate trade wars with the US at the moment. What were you hearing there?
Well, yeah, of course, we've got to talk about the biggest fiscal statement of the year, which happened yesterday, very much overshadowing that inflation data. And that was Rachel Reeves, the Chancellor's spring statement. I was down in Westminster filming for Channel's Business Global yesterday, and it was packed jam with the press, wall to wall, because the UK economy and growth is vital. And this is what the Labour government had promised, and we're not yet seeing any growth under Rachel Reeves's tenure. There were a series of announcements, many of which we've already discussed, Laddie, but there are going to be adjustments to welfare benefits. Basically, welfare benefits are going to be cut, and if you are applying for welfare, that application is going to be monitored much more stringently. Civil service in the UK is going to be reduced. There are going to be budget cuts to day-to-day departmental running. Of course, we know there is going to be the uplift to defence spending and various other fiscal adjustments, which wasn't supposed to happen. This wasn't the plan. When we got the autumn statement last year, Rachel Reeves said she was only going to be making one fiscal statement a year, which is not true. We had a second one yesterday. So she is under pressure, under ropes. And there are a lot of politicians within the Labour Party who are besides themselves. They're seeing Sir Keir Starmer and Rachel Reeves moving further to the right than what we saw from Tony Blair. You know, they're targeting the poor and the vulnerable. And yes, so Rachel Reeves on the airwaves this morning trying to justify these cuts to welfare. But yes, it definitely doesn't feel like it's a Labour government ruling Britain at the moment.
Yeah, it's quite interesting, you know, when some of the promises, you know, the campaign trail, when it starts to change, when it actually comes. But thank you so much, Juliana, for giving us the details of what's playing out right there in the UK. Thank you.
Thanks, Laddie.
Yeah, so there you have it. Definitely not an easy time.
I guess the realities are the realities. It doesn't matter what party is in charge of running the country at a point in time. They see the realities, and then you have to think of how to solve the problem.
Yeah, especially when it means, you know, campaign promises have to somehow change.
Well, do I say we're used to that in Nigeria? Do I say that? I didn't say that.
Yeah,
Laddie,
you didn't get that from any.
No. See you at 1 p.m. All right, just before we let you go here on Business Morning, yesterday we had the first negative close at Nigeria's stock market. It was a drop of 0.10%. There you have it. And then the equities close to 65 trillion now. I hope we do not lose that level. Activity was more of green. Just the deals went into red. Top gainers, mutual benefit, Royalex, and we can see insurance playing up there again. Those penny stocks are getting the attention of investors at this time. Top trades at WAPCO, Sovereign Insurance again, and QTix are there. But at 1 p.m., Business Incorporated will be here, and it has intraday numbers, or will have intraday numbers at that time, and he'll be here with Laddie to take you around the world of business. Updated information is what you will get. I'm Ini John McWell. See you at 10 p.m. for the stock market report.